a quarter of our GPs are actually either have one or more women right at the top. And I think that was not intentional. I will have to say we did not invest through a gender lens. I think by simply being earlier and backing emerging managers, we were unintentionally sourcing out of a pool that we weren't targeting.
We've noticed that there is a wave of women creating incredibly interesting businesses, but they're still at the seed, pre-seed levels. One comment that was made earlier by Stefan is that actually they are a little bit more risk-averse than women. So taking debt seems very risky to them, and they will be less inclined maybe to take that. So we've seen, surprisingly, the conversations we've had with female founders are less dynamic than we've had with men.
The idea that meritocracy and diversity are in conflict is fundamentally flawed. We all know that. But of course, in today's polarized world, thoughtfulness doesn't trend, extremes go viral, balance gets buried. That doesn't mean we stop pushing for a system where merit wins, free from bias, open to all. And so, in celebration of Women's History Month, I'm so proud to present a powerful conversation from the Billion Dollar Brew London, hosted a couple months ago by my firm, Beyond the Billion, and Dell Technologies, where we tackled exactly how women continue to drive returns in business, investment, and innovation. We explored financing pathways, from venture capital to debt, non-dilutive capital, and the evolving LP landscape. Building a firm franchise, how emerging fund managers can navigate today's challenging capital environment. The rising influence of family offices, where female founders are leading in AI, FinTech, and Deep Tech, and why investing in them is just good business. This special feature is brought to you by Dell Technologies and the Dell Women's Entrepreneur Network, supporting female founders and funders driving the future. Let me welcome my panelists, Fatou Diagne from Bootstrap Europe, Jade, co-founder and CEO of ROOBBA, Mohadeseh Abdullahi from Molten Ventures, and Wiem Gharbi, who's building what's next in AI, Ankar AI. So today's topic, women, wealth, influence, and innovation shaping our future. Ladies, let's start with setting the stage in showcasing the work that you do. Tell us a little bit who you are and why you think I invited you for this powerful panel. Ella.
Hello, it's a pleasure to be here. I am the co-founder of ROOBBA. ROOBBA is the e-commerce tech-focused furniture brand, harnessing CGI and production innovation whilst combining our in-house development of generative AI 3D technology, revolutionizing the way that you shop. So the number one pillar that we always go back to is our production. And we spent years investing time, energy, money into our production-led factories and manufacturing technologies that we have in our factories in Europe. We did that because we wanted to compete with the prices of China. And we are able to do that. So essentially what we do is we have a large production facility that actually now we've expanded only does ROOBBA, and we are able to keep the quality as high as you would expect from Italy, but lowering the cost using our production techniques so that we are competing with the prices of China. Not only that, but we are able to essentially offer a very, very unique production and product offering. So we don't have any minimum quantities. We can essentially launch a collection, and that means we can launch it in every color, in every size, so that as a consumer, you have much more choice. The second pillar that we always go back to is we are very, very focused on 3D, and that means that we can rapidly market launch our collections within 2 weeks. So we don't basically stock any products, but our lead times are very, very competitive because of the data that our team are very focused on. And that means that we can save cost and ensure that we focus heavily on our marketing, which brings me on to my third pillar, marketing. The home and furniture industry is typically very, very outdated. It's very traditional, old-fashioned, not sexy. So we're here to basically shake that up. And we're very focused on the way that we market, and we have our in-house animation, basically a whole Pixar department in-house that focuses on animation so we can control the content that we put out, which is typically very hard in furniture because, as you can see, they're big, heavy objects and not easy to move around. And the last thing that we focus on as our fourth pillar is our generative AI technology that we are developing in-house as our IP that allows essentially you to shop incredibly easy and quickly for your home, which is typically very long-winded. And that will prove very important as we move towards the next expansion phase into completely taking over the kitchen and bathroom industry that is, again, very, very outdated. And so that will prove very, very important as we move on.
So I'll add why I invited Ella to this table. So we've known each other for a long time. So my entrepreneurial, I guess, nerdiness or bug started long ago. So I see some King's College London alums here. Thank you for coming years later. You know, we started the business club, and I'm glad to see you continuing to build. And of course, you are a next generation. Your family legacy lives within you. You've been in the Harrods sort of institution as a brand in interiors for the longest time, and now the spirit of father, which is ROOBBA. It's really the work that you're doing, and I think represents the innovation and the influence that the next generation can have in their building, which is represented in Ella here today. But of course, the road is never easy for funding, and the funder plays a very important role in this. Fatou, you are that GP in Bootstrap. Tell us a little bit about your founding story and why Bootstrap in Europe.
Thank you. That was a great pitch, by the way.
Thank you.
Might get checks later. This is the very reason.
We'll talk later.
I'm Fatou. I'm the managing partner of a fund called Bootstrap Europe. We invest in technology like VC funds, except we do it with loans to support startup in technology, life science, energy transition, climate tech, etc. We started the fund with my partner Stephanie here over 10 years ago. We have a fantastic team based in London and Zurich, and together as a team we have been involved in about 1 billion, I like the billion number, transactions helping founders and their investors limit dilution with non-dilutive funding, venture debt. That serves two roles. One for the founder ecosystem is to complement the equity funding, because it's not the only tool available, especially when you're thinking CapEx-heavy businesses, long R&D development cycles. You want a lot of funding and you want non-dilutive funding. And then the second point is plugging the gap for limited partners, because one of the most exciting areas, not only for us, but for our investors, is innovation. This is where most of the value and the growth is being created in Europe today. And it's very hard to gain access to this through VC funds. The VC funds are doing an amazing job in Europe. The ecosystem has grown over 10 times since we started investing. But LPs like to mix it up a little bit and give them access to the same asset class, but with different type of returns. And if you know asset allocators, they like to diversify. So it's really enriching the ecosystem in Europe. We love meeting new founders, and I have to say, every time I come to a women event, I'm amazed by the numbers of women hiding, whether entrepreneurs or VCs or LPs. And I think we need more events like this to foster these relationships.
Thank you, Fatou. And I'll come back to your interesting strategy and how you started that. But of course, as we talk about LPs, limited partners, Mo, you are with Molten Ventures, which is publicly listed. So a very different approach to how most limited partners take it. Tell us a little bit about Molten and your personal journey to this.
Yeah, sure. Happy to. Great to meet you, everyone. Molten is a publicly listed fund. We were founded back in 2006. We're very much a European-focused generalist in sort of nature. We do enterprise SaaS, consumer, deep tech, hardware, from Revolut to Trustpilot, UiPath, sort of some of our key holdings. What's interesting on the LP side is about sort of 7 years ago, we decided to put our LP hats on because we noticed a significant underfunding at seed and pre-seed in Europe, particularly compared to the US, and we didn't understand why. There were amazing GPs in the ecosystem, like Reshma, we were just talking about Seed Camp earlier, and we were wondering why that gap existed. So we decided to play a role opportunistically at the beginning, allocating a few million here and there to some of the key GPs, and then we committed 150 million of the balance sheet money to the program. The goal being that we will invest in the managers that come right before us. So we start at Series A and B. Why don't we help the ecosystem grow right before us and partner up with these companies at the point where they reach sort of our criteria of investment. To date, we've invested in 81 funds, which is about 2,500 plus underlying portfolio companies that we have incredible data into, and we're trying to track that and see if there are like signals we can pick up from it. And in dollar value, we've actually now invested more in companies out of the fund of funds than in the fund of fund itself. So it's kind of like a success KPI for us. Maybe on the female side a little bit, a quarter of our GPs are actually either have one or more women right at the top. And I think that was not intentional. I will have to say we did not invest through a gender lens. I think by simply being earlier and backing emerging managers, we were unintentionally sourcing out of a pool that we weren't targeting. So I think there is a point to coming early, and this is where a lot of these women are, right? If they don't make partners in their big billion-dollar funds, they leave because they're not getting the promotions that they're looking for and not getting maybe the worth of the energy they've put into their careers. So they leave, they spin out, build smaller funds, and I think that's where they're hiding sometimes, right? So it's a point of coming in a little bit earlier, and that's what we're going to need to do.
Yeah, and what brought you to this journey of being at Molten? I know you had a very interesting thesis years ago.
This is a very random thing, but I wrote my master's thesis back in 2016 on impact investing when it wasn't cool. Mm-hmm. And I collaborated with an asset manager called Candriam, and we built their first ever impact fund of funds. So that was my first job. So I did my career a bit backwards. I built a fund before knowing how to invest. So a lot of learning how tax law works and how to structure a fund, and I had no idea how to do a deal. But it was amazing, and I was with them for about 5 years, a very concentrated impact-focused strategy, and then I fell in love with venture and maybe out of love with PE, so that's why I moved.
Yeah. And I guess, the reason I highlight that is, of course, often we're told that women and people of color don't have the track record, right? And therefore, they raise smaller funds, actually. So for the benefit of those of you not in investment, I know we have some founders in the room. Limited partners are those that invest into the venture funds. They might be ultra high net worth individuals, family offices, pension funds, fund of funds, which are also, in effect, money managers, right? They also have their funding from the outside. And ultimately, a lot of times, the limited partner, so someone who looks like Mo, will say, what's your track record of investing? Have you been investing for the past 10 years? Fatou is laughing because she was asked this, and Stephanie, 1 billion times, I'm sure. Although she's done the work, she's still asked this, right? Even till today, our women are still asked this. And the reason I highlighted that is because women and people of color often have a more circuitous journey, because not everyone comes from a position of privilege, and that is sort of the readjustment of pattern of success that we'd like to really highlight, right? It's not about complaining. I think the intention of a panel like this is to showcase, look where the women are doing the work. It's not about lowering the standards, but it's readjusting what your filters are that are actually holding others back in ways that maybe you didn't intend. So with that, Wiem, the trend you are building on, of course, is a reason why we wanted to have you here today. You spun out of Palantir, spending a couple of years there in product and in strategy. Tell us about what you're building at Ankar.
Hi, everyone. I'm Wiem. Thank you so much, Sarah, for having me. So I'm an engineer by training. I studied math, artificial intelligence. Back in the day where it used to be called machine learning, now it has been rebranded. So as Sarah mentioned, I spent about 6 years working at Palantir, where I was forward deployed engineer, and I saw firsthand what it means to build product to solve real world hard problems. That kind of gave me the inspiration that it's on me to also kind of continue and take the learnings that I've had to be part of the room and influence decisions on how software is built, how it's being scaled. And that's how I kind of got exposed to the problem that we're solving with Ankar. So Ankar is a platform for inventors. We build artificial intelligence tools that are tailor-made to help IP professionals and R&D teams be more thorough, be more productive in creating and protecting their intellectual property. And the mission that we have is that we want to build better tools to help harness kind of the power of invention in helping make the world more original, ultimately. The way that we got exposed to this problem is that I was on the inventor side at Palantir, me and my co-founder, and we got exposed to the inefficiencies of actually creating intellectual property to create more value for our company, for our product, products, make our work more visible. But we saw that the tools that we were using at the time were very inefficient, time-consuming, and thought that there was a better way. So we decided to embark on our own journey and build our own tool. And we're working with innovative companies, large enterprises across different verticals of like automotive, pharmaceuticals, of biotech to like help them like actually better create intellectual property, better protect intellectual property, and monetize also their intellectual property. And this came from 3 challenges that we observed. The first one is data. So there are about 150 million patents that are publicly available. On top of that, you add trademarks, designs, a trove of technical data that is publicly available online. No human will be able to analyze all of that. The second kind of piece that feeds into the same challenge is that competition is fierce. So a lot of companies are becoming more and more competitive, trying to like build more, develop more, and as a result also protect more their IP. And then the third kind of challenge is that the age of AI is here, and more inventions are actually being driven by AI and automatically created by AI. And this means that large organizations need to actually harness the power of these tools, but also make sure that they are protecting their promise. And this is what we do. We build at the intersection of both.
Love it. Very interesting. So, Fatou, I want to come back to you. You were talking about, when you were forming your fund, part of the inspiration for that was you realized that, there needs to be a more creative way of thinking about capital. And yes, with the $1 billion fund for women, with Beyond the Billion, we focus on venture capital, but we understand that that is not the only solution nor measure of success, although founders are often bamboozled with TechCrunch, right? And the announcements of funding rounds and all of that. But we've seen in the recent years how valuations have crashed. Empty valuations don't always work. Tell us a little bit about your thinking around the capital space and where venture debt comes into place here.
We love when companies raise a lot of money, and as you say, competition is fierce, so raise as much as you can. What we're saying is on the way to being very successful in building your company, you're going to have a lot of money raising to make a big pie. At the end, what happens is that you might be completely diluted to owning only 2 to 5% of your company after 15 years of building it. It can be the founder, it can be the VC. And so what the debt helps do is, let's say you need 100, we say commonly, you need 100 million and 20 years to build a biotech company or a deep tech company for that matter. If 50% of that money comes from debt, let's say you would have reduced your dilution by half. It's really simple math. And the most sophisticated of founders, it's often repeat founders that use that tool because they understand the pain of having only a few percentage points of your company at the end. If the sophisticated founders and their investors understand the math, then we are being helpful to them in limiting dilution. Either when you want to accelerate your growth because you figure out your unit economics and you just want to boost your growth engine, you want to bridge to an exit, you want to make a strategic acquisition, you want to build an extra factory, hire additional engineers, because there is a market opportunity that is now, and you don't want to dilute until you've reached a certain inflection point. That's when we are useful. You have to use it sparingly. It's very selective. I would say in Europe, probably less than 1% of companies can really qualify for the tool, because first you need to have raised convinced equity investors, and based on that, be able to have a stable enough business to afford the repayment of the debt, because it's still debt. But it is an incredible marker of success. If you were to do an analysis of the successful companies that have raised money, exited, or built very sustainable businesses, I would be willing to bet that 80% of them have had venture debt in the past. Because when you start understanding that your equity is undervalued, you don't want to get diluted at that point in time. You want to pass certain milestones and then raise at 2, 3, 4 times the valuation.
Yeah, so of course, venture debt, you need to qualify to be able to even get that. Just out of interest, because of course the topic of today is where are the women? How are the women showing up in applying for venture debt? What are your thoughts here? Are you seeing more coming through the doors?
We've noticed that there is a wave of women creating incredibly interesting businesses, but they're still at the seed, pre-seed levels, and we've been tracking some of them. Mm-hmm. We can see that they are progressing and coming through the funnel. One comment that was made earlier by Stefan is that actually they are a little bit more risk-averse than women. So taking debt seems very risky to them, and they will be less inclined maybe to take that. So we've seen, surprisingly, the conversations we've had with female founders are less dynamic than we've had with men. Women will be more cautious. So it has benefits, but at the same time, we would encourage women to go for it. If you can keep more of your company, do it. Don't dilute. We're really happy that we see definitely more women in the fields that we like. So we've been very geeky from the side. But we've been always super interested in machine learning at the time. The first venture loan we ever did was in an artificial intelligence company in Sweden. That was 2011.
Wow.
In the hard sciences, we see a higher percentage of women. So in life science, we see a lot of women CEOs because the science doesn't lie. You don't need to bullshit about it. So maybe women are more comfortable building companies around real tech than around maybe just a business model. We never went out looking for female founders. We never considered ourselves as female investors. So we have a very diverse team and we have a very diverse portfolio, but it's true that because of this diversity in the team, we have maybe 30 to 40% percentage of the founder team having a woman element, which is way, way higher.
Yeah, and I see Ting Ting Peng in the audience here with Move, who raised 250 million in debt and 250 million in equity. For those who don't know, Move actually provides the fleet to Uber, is invested in by Uber and many others, and she's the Chief Transformation Officer. So she's not hiding, she's in a bright green dress. Go and talk to her about those options later on, because this is the very purpose of us coming together. Now, Ella, we've had some recent chats about fundraising. A little bit of your challenges as well, and some of your strategies actually in thinking about who to raise from, how to be strategic. Do you raise now? Do you raise later? Can you walk us through your process about thinking through, as you hear Fatou talking about dilution here and all of that? I mean, you've been in the family business world, so somewhat you've seen this, right? This is not your first rodeo, although you're young.
Yeah, absolutely. I have sort of an interesting hybrid of sort of different approaches here. Just to give a little bit of background, so I was in a family business. My father, he created one of the biggest bathroom companies in the UK, and I essentially learned everything from him. He unfortunately passed away. After that point, it was very much, I understood that industry, but I saw a gap in the industry as to what hadn't been achieved yet. That's why we started ROOBBA. And so with that, we understand there's a lot of different dynamics in terms of interestingly, what is focused in terms of investment. There are different parts of investment in different parts of the world that people like to invest in, and I'm sure we can probably touch upon that. But obviously, in our brand, we've got manufacturing, we've got AI technology, which is a buzzword at the moment, which is actually amazing to have, but it's also very important to our company. We don't just do it just to have, the AI. We genuinely are really passionate about it. What's really interesting in terms of our strategy is you'll get different conversations from different people all around the world. So for example, if you go to a UK-based sort of either VC, family office, private equity, we had a conversation with the founder of New Look, and he have a family office not too long ago. I'm very interested in terms of this company and our company, which is fantastic. They are very production-led in terms of their manufacturing arm, and they understand product, and so that was the focus there. Whereas when we went to San Francisco earlier this year, they only want to invest in AI. So I think as a founder, you always want to understand who you're talking to and what you're going to have that conversation with. Almost in San Francisco, the concept of manufacturing is an absolute, they have no idea what that means. They don't even want to touch it. But in the UK, it's the complete opposite. They not really bothered about, not in terms of every VC, but in terms of who we were talking to, it was not really about the AI. So for us to have both people on our board and have both people as investors is very, very important. And that's actually why we have now we actually had already a seed. We've gone through the seed fund, so we have our seed fund done. They're not actually UK based. They are actually New York private equity firms, VC and family offices in America, which actually is very, very important to us because our next expansion point next year coming is to take over America with ROOBBA. But our next round now is focused on joining two very, very big powerhouses when it comes to, in terms of who we're talking to for our investors. I can't name names at the moment, but fundamentally one is very product driven and very manufacturing driven. So in America, you're looking at Walmart, that type of focus, and they have an investment arm within them. And then the other side is AI and tech focused. And so having two of those investors on our board, and obviously as investors, is very, very powerful to us as a company. The other thing I will say is equity is absolutely key. We retain as much equity as possible, and the one strategy that we are working on at the moment is, and we talked about this actually earlier this year, Sarah and I had a conversation when we were going to San Francisco, and we were actually really ready to raise our Series A at that point. Really keen to go into San Francisco and Silicon Valley and raise our Series A. We decided not to because I'm very grateful for this. Our company started to expand drastically after that conversation, and the revenue expansion and what we've achieved this year is far outweighs our targets and what we've set out earlier than that. And so we're riding the wave to get to a point of valuation, to get to a point of revenue that we can then go to which we're now talking to our investors, new investors, the next board of investors at a much higher valuation to retain our equity. And so that is our strategy now, and I hope that will pay off.
Yeah, very smart. So Mo, as you're hearing these I guess these two tiers of the GP, the founder, thinking about the ecosystem, what are your thoughts here on the last couple of years? I mean, 2021 was a high despite COVID, and yet liquidity hasn't been as positive as it could be. What are you seeing on the LP end, and what are your thoughts in terms of 2025? I mean, it's already November.
Yeah, it's true. I think venture capital as an asset class is more exciting than ever. I think LPs are really want to allocate, especially LPs that have 10 or plus years of experience. We call them the more professionalized ones. They can take on a little bit more risk and can see the upside in the asset class. But the bar is super high, right? So the exit, market pretty much shut. Essentially, we're seeing some upsides coming, but liquidity is an issue, DPI is an issue, and a lot of LPs got burnt, right, during those over allocation periods. So there was a little bit of reluctance. They were sitting on the sideline. What I did realize though is that it wasn't a conversation about I will not invest. It was very much I'm sitting on the sideline and I'll come back to the market very soon. So it's very different to like 2008, right? So it's a slightly different way to look at liquidity or a liquidity crisis of sorts. So I think that is picking up, and every conversation I've had with LPs in the last sort of year has been relatively positive coming back into the ecosystem. But like I said, the bar is super high. Pension funds are excited, which is great, especially for female-led GPs. I'm seeing a bit more allocation there. And something else I find personally exciting is that I do think there's a lot more focus on specialized funds more than ever. And a lot of LPs historically have been focused on generalists, which again limits our access to more female GPs. And I find that there are a lot more women in the specialized areas like life sciences and deep tech. There is a talent shortage on the engineering side, unfortunately, and actually we've gone a little bit backwards, which is a sad piece of data to share, but we've actually, we're having less women on the actual engineering side, but I do think that there are more women on the GP side actually coming out on the emerging markets. So we do need to look at the stack at every point.
Yeah, and how do you think 2025 will pan out? I mean, I see a lot of eager GPs in the audience here, as they're still planning their fundraisers. Some of them have been fundraising for some time. We know that. It's been tough out there. It's been a fundraising winter for many, including those in Fund 1, Fund 2, Fund 3. So the definition of emerging funds for many, it's Fund 1, Fund 2, Fund 3, early in the journey. Yeah. How will 2025 pan out if you had a crystal ball, lady?
I mean, it's my job to be optimistic as a VC, so we're always a little bit optimistic. So I think it's going to be a little bit more clearer in terms of the deployment cycle. What I love to see is, I've seen it across the board, not just female GPs, but emerging managers that have used this period to hustle, right? They've hustled in many ways. They're warehouse deals. They have brought deals to LPs and been like, listen, I really like this one. Do you want to do it? Do you want to do this one with me? Or do you want to allocate? It just shows that they are in the market, they know what good looks like, and they're engaging with their LPs. It's a long-term game. You're not going to be able to get an LP in after 3 interactions. Sometimes it's 2-3 years of knowing someone, and then finally the deployment cycle opens up and you're the first call, right? So I think seeing those long-term relationships is quite powerful, and I would encourage people to keep doing it. And 2025 that should be an opening, I think.
Yeah, and Wiem, of course, AI is the topic of the hour, but you've been building in machine learning for the longest time. We were with one of the PayPal mafia recently in Singapore, Jack Selby, and he actually said this because he manages the Thiel family office. If there's a startup that is not innovating in AI, it's almost a risk for us, because very quickly there will be another startup that could blow this out of the water because of AI. As someone who's an expert, who's building from an engineer background, is this a valid strategy that VCs have, that AI has to be in everything? How are you thinking about your own strategy? How are you, emerging as the winner among the competition? Because everybody is in AI, right?
It is an important question, is should all of the capital get concentrated into artificial intelligence? Obviously, there are other kind of innovations that are happening out there. Companies are doing great things. However, I do think that this is like a pivotal moment that we're seeing right now. Like the advances that we're seeing in the infrastructure layer, in the model layer, in the application layer have not been possible before. And I think allocating more capital into artificial intelligence and into women also building in artificial intelligence will kind of help create more progress for us as humanity. And I do think that the pivotal moment will become more clear as large organizations, as governments, as enterprises start to actually harness productivity gains from artificial intelligence. Will be possible if we are kind of helping the next generation of companies actually get started. The key kind of piece that is critical is that these companies are quite capital intensive because it takes a lot of money to train models, to recruit talent. Competition is fierce again, and having engineers that actually know how to work with these tools. So I do think that if there's a moment, that moment is now, and it needs to be seized.
So I guess if I were to make it specific, and I want to just give a note for everyone to think of your questions because we'll open it up. This is interactive. This is your time to ask. But just to finish up on this point here, for capital allocators that are thinking about, frankly, they're pressured by their LPs to say, are you guys investing in AI? How are you delivering returns in AI? For the founders who are now building, they're like, wait a minute, I have to be in AI to get capital. How would you advise these two pockets of personas in the ecosystem to be building in AI today?
For investors, what I would say is that look at companies that are trying to actually solve real problems and deliver real and measurable value. I think there's a lot of hype in that, actually trying to think critically about what type of tools will help actually generate progress for us as humanity, meaning that we need to engage with companies that are building in AI for defense, AI for government, AI for biotech, for pharmaceuticals, for protein generation. All of these topics are critical for the advancement of us, who we are, how we're going to kind of continue growing as a society. So I would encourage everyone to have a critical lens on where is the capital getting deployed, what type of companies, what type of applications. And then for the founders out there, is thinking about where can this be additive in your business. It cannot be just a shiny tool that you can attract capital. It needs to be something that is fundamental, that actually is changing the way that you do things, and build to be AI first. As in, think about your data. How are you preparing your entire kind of data and tech stack for you to be able to actually leverage these tools? So it needs to be something that is actually unique and value additive for the founders, unique and value additive for the actual LPs, for it to matter.
Yeah, absolutely. And now I'd like to open it up for questions. I see a couple of hands already raised. Yes.
Hi, Unzube Ufodike. I sit on the Industrial Advisory Board for the Queen Mary, University of London, and I was keen to get your thoughts on where academia fits into this. We have a department, the Queen Mary Innovations Department, and we spun out quite a few companies from there. Some are turning over millions. So keen to get your insights on how you interact with academia.
I think Sarah and I are absolutely the right people to talk to about this because we are obsessed with that, having been from King's in terms of we literally, that was our life at King's. It was not the degree, even though we did well at degree still. It was King's Business Club. And I think, I don't know about Sarah, but I learned everything pretty much from that club, more so maybe than the degree. So as an advocate, I would say that what we need to put into education, not just in maybe the outside of just the degree, but also internally within the degree, is life experience, like what it takes to actually run a business, what that means, having students not just in the classroom. I think there needs to be like on the ground, like either there's a type of budget that is put towards like actually starting some sort of company within your time in your degree, or it's working as a placement, more so as placement students, or something within the entire ecosystem of the university, like we had the business club that gave us the experience like running a business is. And we are absolutely advocates of that. So absolutely. I think it needs to be very much pushed towards not only just universities, schools, like from a young age, and I think it needs to come from the top in terms of government regulation and policy.
Yeah, and if I may add, just because we have a success story, one of our friends was building in the basement of a dodgy bar in Elephant and Castle. Those of you who knew Elephant and Castle back in the day will remember this, but because we didn't have the support, frankly. I was the founder as well for the King's College London Business Club, so Ella was junior to me, but we didn't have the support of the university, so we had to have our meetings in this dodgy bar office that I can still remember the smell. These two guys who essentially, I think they both dropped out, right, in the end, and then came back and finished it. But they exited their company, sold it to Blackstone, $750 million.
Nice.
Years later, and that's how wealth is generated. But of course, remember back in the day, we're aging ourselves a little bit, entrepreneurship wasn't as cool as it is today. And so for you, as the representative of academia, bringing us in, I think would be absolutely key in showcasing that this is also a path for success and that it's hard.
It's true. I will just add, it's like 10% of patents come from women, right? It's tiny. Like it's a really small amount of IP that we're generating. I do have one qualm sometimes, I think, is that the ownership structure that universities offer founders is a bit of a hindrance, right? So the incentive to be able to give up so much of your company so early without knowing where it's even going to pivot is a bit of a challenge, and that kind of differentiates us between the US. The US founders I meet, there's a little bit of like, I want to build a company, I have no idea what it is yet. And we're like, I've got this amazing idea, but I have no idea how to make this into a functioning business model, right? So there's a little bit of a mentality difference, and I think universities can play a huge role in bringing entrepreneurship in. I think King's is actually doing a decent job with that, and there are other universities across sort of London and the UK doing this. Bristol, I mean, how many unicorns there? I think it's like 10 or something. There are great hubs of talent across the UK, but we need to think about this ownership problem a little bit more.
Next question.
I'm Dr. Wiem Gharbi. I'm the founder of Nature Alpha. We're the Bloomberg of environmental data with Geo AI at the heart of what we do. We support investors. Thank you so much for a wonderful, wonderful panel and incredibly inspirational stories. I wonder if you could help us or help me understand. We're talking about the Billion Dollar Brew. Does that mean there's $1 billion somewhere for us as female founders to access? And if so, would you mind helping us understand how to?
Are we saying this is a network of funders that makes up the billion?
Yes, it's a consortium of funds. So if you go on our website, we have 127 funds as of today that have all pledged a dollar amount to be invested in you, women-founded companies. You still have to be driving alpha, meet the criteria, do all of the work, but they've made a conscious commitment that we want to look for great female founders innovating.
For asking about our website and the 127 funds, we built a filter for female founders to put in or for anybody, it's an open website, or sector, stage, and geography, and you can find the funds that might align with what your business is. So again, no guarantees of investment, but at least it gets you closer to a source that could be meaningful for you. Then it's up to you, of course, to do your research and to develop the relationships that you need around that fund. Like you said, it's a relationship business. It's not a overnight. Remember, it's a marriage too. Yeah. It's after you get into bed with this fund, you all have to live together for a while. So don't forget to make really smart selections, as you've been hearing.
And of course, part of the Billion Dollar Brew convening structure is that we have an investor roundtable before, so you're guaranteed when you attend to meet at least 20 investors that are interested in investing in women. Question. Yeah, Anne has something to add very quickly on the resource for you.
It's perfect timing. So I'm Anne, founder and CEO of Global Invest Her, and I was commissioned by Carolina and Dell Technologies to build on the work that Dell has been doing for many years. Do you know about the We Cities report? So that is a global report that's been done over several years. The latest one was last year, and it basically ranks the top cities in the world for women entrepreneurs. The top 55 cities. Guess who's number one? Yes. Okay. So London is number one. How many of you are women entrepreneurs? Hands up. Okay, everybody see them? Right? Up, 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 high, high. Okay. So, together with Dell Technologies, I said to Carolina, this is amazing work, the We Cities report, particularly for policymakers in each city to see what we can do. But what if we went a bit further? And what if we did a funding blueprint of the different sources of funding and different communities available in specific cities? So we've done 5 cities to begin with: Austin, Bangalore, Sydney, Paris, and London. There are 145 sources of funding in here and different resources for you. So we outline the general sources of funding in the city, the ones that are women founder specific, the business communities and other sources, and it's dilutive and non-dilutive. So that's the thing. This is all about finding, it's a funding menu out there. When you're looking at funding, you need to look at all different sources of funding. It's not all about VC. Okay, so that's a very important message. And at Global Invest Her, we have a funder directory as well, a global directory of sources of funding that are women founder friendly. So come talk to me.
Yeah, awesome. Next question.
Thank you for such a great talk. My name's Lavinia. I run a platform called Women in Blockchain Talks. I started it because I wanted to be the Oprah of blockchain and just shed a light on women founders or women entrepreneurs and builders in the space. And in doing so, I now help women to become builders and entrepreneurs in the space. And so I heard a lot of talk about AI. Well, what are your thoughts on blockchain? Obviously, we've seen with the election, the bull market is coming back. So what are your thoughts on blockchain and business and incorporating it in business and getting funding for not crypto, blockchain, particularly blockchain for good? Thank you.
So one of our prominent companies is Ledger. Yeah, so it's a crypto wallet. But what's really impressive about that is that it's not so much about crypto than it is the blockchain is the fundamental part of it, and we're backing the infrastructure. And I think there is a thesis around that, and I think a lot of investors do believe that. There's a difference between the liquidity bit of the crypto, which I don't think people want to touch because that's like the hedge fund world and the risk is too high there. Sure. But as an infrastructure, like why not? We also did settlement, which was the section sort of Web 2, Web 3. So yeah, it's on thesis for us. It's kind of like AI, B2B, SaaS. Like I see all of these as they're just they're tools, right? And to sort of alienate one tool will kind of close off an entire market. So that's why we actually think in terms of business models. We think enterprise SaaS, we think consumer, think deep tech, think hardware. These are the ways that we sort of structure our thesis points, and within that, there's so much intersection. So yeah, I mean, that's definitely a thesis point that we're interested in.
And my boss just told me it's the last question. Key takeaway, just one sentence for founders and funders in the room. Let's start with Wiem.
Well, I think it's important to make sure, as capital allocators and as founders, that we have like women in the room when it comes to both like ensuring that we're allocating capital and things that will help make sure that like women are represented and they're creating things that actually kind of matter and scale and create revenue, but also that are well positioned to create the like next generation of builders and founders, which means like ensuring that there's the right access to like talent pools, to mentorship, to pushing them into STEM, like how you allocate the capital into their companies, but also what you're doing at the base to like actually make it happen.
So look around the table, ask who's not here and who's not speaking up. I think that's important. I see both men and women in the room, and we welcome you here because the intention behind the work that we do is, this needs to be our shared issue. Women's issue is not women's issue alone, right? It's our societal progress and it's more for GDP. It's investing in women is just good business. So thank you for that. Mo, key takeaway.
That I want to live in a world where we don't have to invest out of specialized funds. We just invest out of main funds and in good companies. And I think that's what I aspire to. And I think that's what I would like everyone here to aspire to as well. So if you feel like there is a specialized fund that might limit your chances of getting bigger pools of capital in the future, maybe actually aspire for the bigger one. Go for the main pools of capital and question why they're not investing out of that one.
I would like to bring something as a non-European to this room. I'm considered a double minority, being a woman, being black, but I grew up in Senegal, where I was majority. And coming into Europe, I never had the minority mentality. I never had the mentality, oh, I'm a woman, so therefore capital is limited to me, or this is where my horizon stops. And I would encourage everyone to think a little bit outside of that perspective. Don't limit yourselves. The worst thing you could do is try to fit within the expectations of what society or men fix for you. Just disregard them. If you have some, disregard them. If you notice them, fight them. But really just see yourself as an entrepreneur, as an investor, and go play on that field that we're all trying to level, because I think that's the only way we get like a diverse room, diverse investment, diverse returns, and then profitable investments.
I hope that I can give a little bit of a one-line piece of advice is harness your power as a woman, as a female. Never segregate yourself from being a woman. If you find yourself that you're in a room, in a meeting, in an investor board meeting full of men and you are the only woman there, you are the power as a woman, and harness and use that, trust me. And if it is tough, know that it will get better, never give up, because the people that always keep going will always win.
And on that note, I actually want to bring it home. You know, I started the conversation, I opened today with that 2% number, and it can be discouraging. But I'll end today, and I hope you all will agree with me, that all of you in the room would have answered the question, hell yes, I would apply for that job. And all of you here today, by showing up for each other, for yourself, proving that you're the best person for this damn job, you're doing that. So congratulations, please give yourselves a pat on the back. We don't get that often. And a round of applause for my amazing panel here.
And thanks so much for tuning in this week. You can subscribe wherever you get your podcasts and follow our socials on Sarah Chen Global to get the latest on the show. It would really help me out too if you enjoyed this to rate and review our show on Apple Podcasts and share your favorite episodes with a friend. I'm Sarah Chen-Spellings, and you've been listening to Billion Dollar Moves.